Focus. Ideate. Innovate. Enable.
Hello and welcome to this week's episode of Decoding Business Growth Season 2. I'm your host A.B. Ravi. Once upon a time, a banker was considered a smart and a cool guy. He borrowed at 3%, lent it at 6%, and was at the golf course at 3 p.m. after 3 martini lunch. He thrived on this huge spread. Not anymore. The whole landscape has changed. At one end of the spectrum, you have the traditional money lenders, and at the other end, you have the big banks. In between, you have too many players like the cooperative banks, regional rural banks, NBFCs, VCs, and PE players. So today, money per se does not seem to be a problem. As a result of its excess supply, these players are fighting for an entrepreneur's mind space to enter his wallet space. Result, the competition has not only reduced the spread considerably, but has raised risk many times over. So given the situation, how do you stand out in a crowd? How do you thrive in a business where the raw material and finished product are the same? Well, the simple answer is put your money where the mouth is. And that is what the heroes of this week's episode have done. Brahmanand Hegde and Ramakrishna Nishtala, two friends, decided to tap a segment of the market which was underserved by the current financial system. Result, Vistaar Financial Services has a huge following from micro businesses. In a short span of 6 years, this Bengaluru-based firm has carved a niche for itself. Take a look at Nishtala's story and you know how to marry years of experience and gut instinct into money-making business.
The duo seem to have taken a leaf out of C.K. Prahlad's book, Fortune at the Bottom of the Pyramid, and literally made a fortune out of it in a short span of 6 years. Brahmanand Hegde and Ramakrishna Nishtala, two colleagues, chucked their high-paying jobs and plunged headlong into the micro-lending business by setting up Vistaar Financial Services in Bengaluru. This move followed their conviction that there was a huge segment in the market that was underserved in terms of finance. This class of people, predominantly located in rural and semi-urban areas, typically earned around 1 lakh rupees to 10 lakh rupees annually by running a small manufacturing unit or kirana store, small hotels, general stores, dairy businesses or power looms. For lack of collaterals, the banks kept them out, and in turn these micro businesses shied away from traditional money lenders as their rate of interest was usurious. There was a gap waiting to be filled. By providing loans anywhere between 40,000 and 25 lakh rupees, Vistaar filled a vital hiatus. And, unlike the banks and NBFCs, these hands-on promoters developed their own art and science while sanctioning loans. It was based on their gut instinct over the traditional tick-box approach. The result? Not many people were turned away. This trust they built by not disappointing the needy ones helped in keeping their NPAs at a very low level and also fanned their expansion. And the result is for all to see. In 6 years, Vistaar has grown rapidly. From 21 branches in 2 states in 2012, it now has a presence in 12 states via 198 branches served by 2,000 employees. Likewise, the customer base has zoomed from 13,000 to 79,000. So too the loan books. It has swelled from 36 crore rupees to over 800 crore rupees in 2016. Today, Vistaar is growing from strength to strength, largely because of the promoters' deep understanding of the market. So how did the company come into being? To hark back in time, Brahmanand Hegde is a seasoned banker having worked with ICICI Bank for over 3 decades. His posting was in rural and semi-urban areas, and this is where he cut his teeth. His business partner Ramakrishna Nishtala served with the ICICI Group for 2 decades. His job exposed him to farmers and rural India. but both met while working at Fullerton, India, an MFI owned by the Singapore-based Temasek Holdings. Their chemistry clicked.
We started this risky venture because I have been a banker for more than 30 years in rural India. I had access to market in terms of the customer segments we operate in. One side we have at the bottom of the pyramid microfinance customers, which we have been dealing with. Other side is the farmers and other people who are connected with this. Large segment of MSMEs, which are otherwise vibrant segment, were not getting served. That is where we thought it is an opportunity for us to look at it. The earlier experience of working in this market has given us a confidence that we could build a business model which could be successful in this area.
Clearly, the founders converted the so-called risk of servicing the neglected micro and small businesses into opportunities.
MSME sector is primarily serviced by the money lending or the informal sector till date. Very nature, both me and my partner had basically a intuition or the vision in our mind that we should do something for this segment, otherwise devoid of funding. At the same time, they are very largest contributor of employment, next only to agriculture. So, both these things came together to build a model which could service this segment so that we can achieve a double bottom line.
This uniqueness of its model is helping employment generation in rural India. The promoters are proud of the fact that for every loan of 4 lakh rupees sanctioned, the MSME sector is able to create employment opportunities for 10 people in rural India. However, the success of Vistaar is its robust credit rating system developed by the promoters based on their decades of experience in rural banking. This helped them to develop their own network of market intelligence. For instance, their grapevine approach helps to collect data about a loan seeker. This is followed by a research-backed template to evaluate businesses. Both put together enable the assessment of the creditworthiness of a loan seeker. In the absence of the usual income documents, the promoters do sanction loans purely on a cash flow-based assessment.
The credit appraisal system that we have devised is at the heart of our business model. The starting point for us is the fact that our customers do not have bank statements, they do not have income tax returns, they do not have audited balance sheets, which is what conventional financial institutions would use. So our approach is to say that every single businessman knows exactly what is going on in his business, and for that he uses certain documents. So if you take a Kirana store owner, he has a book in which he meticulously writes down all his sales for the day. He also maintains all his purchase bills very meticulously because that is the basis on which he has to make payments to his suppliers. So we will use these documents. The sales is assessed through the notings that he makes in his sales book, while the purchases are assessed through the purchase bills, and this is converted into a template, so that our credit manager, when he goes for assessment, will use the template and use the inputs of the sales book and the purchase bills to ascertain what the sales, the costs, and therefore the margins that the Kirana store owner is generating. And through this we assess what his ability to pay is, considering his business surplus, considering his household expenses, and any other obligations that we have. So this calls for a very systematic, scientific approach which incorporates the ground reality that the documents are what we refer to as non-traditional documents, but they are the real documents which the Kirana store owner, for example, will rely on to keep track of his business.
Its own internal checks and balances and the 5-step credit appraisal system has made it possible to keep its NPA level at 1.3%. Interestingly, Vistaar is one of the few companies that is working towards government initiatives like financial inclusion and Stand Up India. To capitalize on these newfound opportunities, the promoters are following an adjacent expansion strategy. Each year, Vistaar opens 5 to 6 branches in a state that is adjacent to one it is already present in. The promoters then intensely study that state for a year before embarking on branch expansion. This step is followed to ensure that the cost of branch expansion is kept as low as possible. And this strategy is yielding dividends. For instance, its average cost of operation per branch is anywhere between 3 and 4 lakh rupees, while it disburses loans close to 1 crore rupees per branch per month. All these are reflected in its financials. Its disbursement grew from 41 crore rupees in FY 2012 to 601 crore rupees in FY 2016, recording a CAGR of 95%. Its net interest income during the same period shot up from a paltry 3.2 crore rupees to 108 crore rupees. Similarly, it registered a net profit of 24 crore rupees in FY 2016 compared to a loss of 3 crore rupees in FY 2012. By running a tight ship, its return on average assets stand at 3.6%. All in all, the company's measured expansion policy, strong focus on micro-lending are indeed proving beneficial. On that positive note, it's time for a short break. When we come back, CNBC TV18's A.B. Ravi speaks to Ajay Saraf of ICICI Securities to understand the anatomy of Vistaar Financial Services. Stay tuned. Welcome back. The raw material and finished product of this company is the same. It is money. And the success of Vistaar is dependent on the spread. That is, at what rate it raises the money and at what rate it lends. Of course, the success also depends on the NPAs. CNBC TV18's A.B. Ravi caught up with Ajay Saraf of ICICI Securities to find out why Vistaar is unique. This is what he has to say. Take a look.
Ajay, welcome to the show. Ajay, if I begin by asking you, in this money lending business, you have this traditional small money lender at one end of the spectrum. At the other end of the spectrum, you have this big banks. But we are seeing a lot of play in the MFI space. What makes this segment very attractive?
There is a huge unmet demand in the MSME lending space, and the micro lending is tending to bridge that gap. It's broadly understood that only 5% of the 60 million MSMEs which exist in the country have access to institutional finance.
Okay.
And this is now rapidly growing, but the demand is and the bridge which needs to be gapped is huge. The other point here is that the traditional banks have not been able to do substantial work in the sector for absence of non-availability of the traditional documents. Okay. For credit appraisals. Okay. So the business potential in the MSME lending space is exciting, but it largely depends on how the lenders understand and appraise the cash flows.
While we are on MFI and we're talking on micro lending institutions, what is your own take on Vistaar Finance?
Vistaar is a very strong player in the MSME lending space. It primarily operates in the rural and the semi-urban areas. It is one of the specialist lenders who have been successful in providing financial access to the excluded small business segment. And one of its uniqueness comes from the fact that its ability to assess the cash flows of the small business segments. Okay. And given that the segment has a bit of cash flows which are volatile, you need to understand the client businesses in depth, and you need to work out the trade-wise cash flows, which Vistaar has managed to do very well.
Okay, Ajay, the other unusual aspect of this company, the promoter is running the show with a single digit, or I think 6.4%. It's quite unusual. So, does this worry you? Since they do not have much skin in the business, they may adopt a cowboy kind of approach.
I would tend to think that this is a professionally managed company with the management, focused on serving the need of the small business segment. Okay. I don't think the small stake in itself poses a problem. And we have examples of many such cases where companies are promoters have a smaller stake, and it's well run and well governed company.
But when you look at Vistaar with other finance company, what do you think is their edge?
Their edge primarily is that they started early in the MSME space. They understand that space better than others. The ability to appraise the cash flows is superior, and that kind of gives them the edge to kind of be a successful player in that segment.
Ajay, just thinking of the delinquency rate, is it high in this kind of sector, in the finance sector?
Client selection is a key to building a good quality portfolio in this segment.
Yeah.
And Vistaar has been able to do that. So, they have collateralized loan over 1 lakh rupees, and they have a very robust collection discipline. So they have done very well in the credit control, which kind of make them stand apart in the sector.
Would you advise them to tap the capital market and go for listing?
I would.
Does it make sense right now?
I would tend to say no at this point of a time. At around 850 crore of portfolio, they are in a scaling up phase. Okay. So I would think that in next 2-3 years, when they reach a 2000 crore portfolio, that's the time they should explore listing in the public market.
Not now.
Not right now.
Where do you see the company 5 years from now?
The company would be a significant player in the SME lending space with a footprint nationally, a portfolio which would be in close to 3,500 crores.
Okay.
I think it would be in front runner in enhancing value of the small business segment in the rural and the semi-urban area.
Thanks a lot, Ajay, for being on the show. Very well put.
Thank you, Ravi.
Well, that was Ajay Saraf clinically analyzing Vistaar. On that note, it's time for another short break. On the other side, we take a look at the road ahead for Vistaar. Stay tuned. Welcome back. The proof of the pudding, they say, is in eating. Some time back, the RBI asked Vistaar to conduct capability building programs on MSME financing. This is clear recognition by the regulator that the promoters have good insights into the MSME sector. Clearly, Vistaar has positioned itself uniquely as a banker to micro enterprises. This positioning saw private equity players like Elevar Equity, Westbridge Capital, Omidyar Network, Sama Capital investing 470 crore rupees in Vistaar.
I think one of the investors that the company was talking to at time of the Series B basically said that they had figured out what was unique within an Indian context, how to work with the real India, or as that investor put it, how to figure out the holy grail of Indian entrepreneurship, so to speak. So really speaking, if you look at what they do, there aren't that many peers who are doing similar kind of work, and since they started operations, there may have been a few others who started to do something similar. But ground up, bottom up perspective of how to add value to the micro small enterprise in India, deliver a financial product that makes sense, and then consequently build a really robust financial services company. I don't think there are many organizations who've done it within the customer segment that they are talking about. So sometimes, when we are also evaluating how our companies are doing, you're kind of thinking about who the peers should be and who are the other companies doing similar things. And I just think this company stands out. It stands out completely in terms of how it operates. It stands out in the quality of its team, and it stands out in the relationships it has with its customers. And for us, that will always be the reason why we love Vistaar, really love Vistaar, and think very highly about what they're doing.
Private equity players cumulatively hold 86.5% of shareholding, and the founders have a minority stake of 6.4%. Yet, the promoters are unperturbed and going whole hog into building this company into a formidable size.
Our thinking right from the beginning has been that in the trade-off between holding a larger stake of a smaller company and holding a smaller stake of a larger company, we would always veer towards the latter. And the reason for this is that if we have to make an impact in the segment, and if we have to serve not just a few hundred but serve several hundreds and thousands of micro enterprises and truly become the bellwether of the MSME industry, then it's very important that we should attain size, we should attain scale, and which would mean anything upwards of 2,500, 3,000 crores over a period of time. And in order to do that, because we were professionals who didn't come from business class families, it was necessary for us to raise capital externally, and in the process it also meant that we did get diluted. But we are far happier by having a relatively smaller share of a very large pie rather than the other way around.
The promoters are leaving no stones unturned to push the company into the high growth trajectory. They have set an ambitious target of raising the loan portfolio by 3 times and hope to disburse 2,500 crore rupees by 2018. To achieve this target, the promoters have all the ingredients in place. For starters, they are hoping to set up a branch network of 250 with a target of 10 crore rupees per branch from the current 1 crore rupees. Besides, their financial ratios seem very favorable to meet the target. Their capital adequacy ratio stands at 56%, while debt equity ratio is at 0.79 times. This leaves enough room for it to raise funds through borrowings.
If I were to look forward and see where Vistaar Finance would be 5 years hence, I would estimate that we should be in a portfolio which should be anywhere between 4,000 to 5,000 crores, spread across 14 to 15 states with a branch network between 250 to 300 branches, and a return on equity which should be in the 20s, in the early 20s. More importantly, I think in qualitative terms, we would have succeeded in establishing a business model which will very effectively serve the micro and small enterprise segment in the country. And if we have managed to spawn 20 other Vistaars, then I think we would have done our job well.
If the past records are any indication, then Vistaar is an NBFC that needs to be closely watched.
Well, very optimistic but cautious promoters, I would say. What impresses me about them is that their own credit rating system that allows them to bet big time on small businesses. This punt is what's seeing the cash register ringing. On that optimistic note, it is time to say goodbye. See you next week with another interesting episode. Till then, keep watching CNBC TV18.
Focus, ideate, innovate, enable.